Right, good afternoon, YouTube. Thank you, as always, for joining us. We currently have Fed Mester on the wires, so I will try to bring you any news that comes through from that. And yeah, do feel free to ask me some questions on the YouTube here. I will try and pay attention to them this time and get back to you if you have anything you want me to have a look at or answer any questions you may have. So, what have we had so far today? Well, the big news out in the UK was that Kwarteng has announced that or the Guardian reported at least, that the Kwarteng has announced a 100 billion package for bond buying. Remember, this is not quantitative easing. This is yield curve control. It may look the same and act the same, but it is very much not quantitative easing, as they continue to stress. But yeah, this is larger than the 65 billion that was initially talked about. So there is some more money in the coffers to defend the issues that the markets are currently having. Obviously, if you have a quick look at the cable over the past couple of days, it has certainly come back. Just for those who were following it from last week, obviously we're back above now where we kind of moved down to on the flash crash on that Monday morning. So this is when the budget was announced, and then the Monday morning we had that big sell off into the 103 handle, and now we're back 10 big figures higher from there. So looking at a little bit more north than we have been. We do have the point of control for the previous month, slightly higher up, which I'll be keeping an eye on if we do manage to get up there and tag it. This is obviously where the most volume was traded last month. May be an area of resistance if we get that high. So do mark that up on your charts if you haven't already. Yeah, we're interested to see if we do manage to push that high, because in the very short term, if we drill into the lower time frames, we'll see when that was announced just shortly after 11 o'clock. It was around this time, 11:20. We had that initial sell-off, a little retest of the value high, and traded beautifully down to those value lows, tagged it to the tick, and then traded back to the value high. So still able to get some of these technical trades in if you are following them. I appreciate the market is moving a lot on news these days, but yeah, you want to have levels at which you want to take trades and want to place risks, tight stops, and big targets. And there are availabilities in that market. Same with gold. I know that's one we talked about this morning a couple of times on the two Zooms we did early doors. And gold similarly has been trading off a key kind of high value node back down to the value lows, back to the value highs, and giving up now to the point of control for the day. So yeah, very much behaving itself quite nicely around these volume profiles and value areas today. So do keep an eye on those two markets, on those indicators if you are trading them. We've also got Truss. Currently, she's just been out with a recent interview saying how she has listened and done what was needed to be done in order to hopefully cure the issues that have been with the yields in the UK. If I can bring the yields up for you very quickly. Where are we? This 5-minute chart. Let me put this on a daily. Obviously, the yields have come off quite nicely since that fear on Monday when we went north of 4.5%. We're down and hit new lows for the week at below 3.83 at the moment. Excuse me. So the yield curve control is working. We are getting the yields a bit lower, and yields are something I've talked about a lot on the Zooms. And if you do like the content on here, do look below this video where you'll be able to sign up with us. So with the yields in mind, yeah, they are starting to move a little bit higher. Normally the correlation is, and when yields are rising, stocks are kind of moving the opposite way. So given we've had such a monumental rally in stocks over the past couple of days, let me bring up a daily chart for you on the S&P. A lovely move on the S&P, really, from this high node, low from previous years. We're up nearly best part for 200 ticks in that move, mainly on those lower yields. But the yields are starting to creep higher, given that we are higher than where we were when the markets opened in Europe at 8 o'clock this morning. Yet indices are markedly higher. If we look across the board, we've got the Euro stocks up 2.8%. 16.2, DAX 2.5, a little bit more languishing moves in the US, but bear in mind the cash markets haven't got a hold of this yet. So yeah, in the 1% handle upside on those markets. So yeah, it'll be interesting to see if we do get continuation on this. We have seen, and I've mentioned a lot of times, the up days in bear markets kind of really pale to significance. The ones that you get in bull markets, these green bars that you get in bull markets are often nice, consistent, slow, grinding moves higher. The moves you get in bear market rallies are a lot more violent, and that's what we saw yesterday. Don't forget, though, this was the first of the month and the first of the quarter. A lot of funds and hedge funds particularly move on kind of quarterly basis, and that will likely be a lot of the flow into markets was potentially into new areas from those sort of funds. So how long this lasts, we shall see. At the start of August, that we didn't see the same sort of thing happen, but we have at the start of October seen it, and in September we got a little bit of green on the first day, but it didn't last too long. So yeah, do bear in mind that this could just be inflows into markets, and if you want something to lean on with kind of confirming trade direction, and maybe using the yields at the moment would be wise. They have been very, very good at forecasting forward moves, and often these yields and these bond markets do indicate there's a lot more money, a lot more smart money that is argued in those markets. So they don't tend to lie, and when the bond market sneezes, the rest of the market catch cold, and that is what tends to be the case with stocks. And if you do see these start to really accelerate, I'll be surprised to see Wall Street and the S&P 500 be able to kind of cling on to the gains that they've made so far today. Having said that, we're very much on a kind of bullish trend here. So that's we're in a nice place here, because we might see that kind of continuation as we saw yesterday, but with the yields kind of nudging up as we're seeing now. This is the US 2-year, just north of that 4.08 at the minute. Just got down to that 4% level very briefly. Those round numbers tend to work way more than they should, but these psychological levels are significant, and we just bounced off that 4% level on the 2-year yields this morning. So let's have a look at the data. There are a couple of bits out. As I mentioned, Mester is on the wires at the moment. It's the Chicago Fed, and there is a Q&A along with this as well. Yeah, audience questions are expected. So if we are able to get a link out for that, we'll be sure to put it on the group for you. But yeah, the big one is out at 3 o'clock, so I won't be trading the open today. We've got 3 o'clock data for jobs. When there is data out at 3 o'clock, I tend to avoid trading the 2:30 volatility, purely because I know I need to be out of that position before 3 o'clock, because the market can move quite aggressively given the way the markets have been moving on data recently. Even yesterday, same time, 3 o'clock ISM, it was softer than forecast. And as we know, good news is bad news for indices at the minute. If we scroll back on a 5-minute chart and just have a look at that 3 o'clock time print, here it is. There's the high volume. So you get that volume on the open, which is normally the high for the day. But you can see here with that data coming out at 3 o'clock, that was the high volume move, and hence why I like to trade it more than I do the opens on 3 o'clock data. And yeah, very, very clean move. And I ended up getting out of it around here, but it did pretty much double that move by the close. Nice little rally, and just kind of got a little bit of selling into the close itself, as the profits were taken at the end of the day. But really, really nice directional move in stocks yesterday. One of the nicest days we've seen, I think, as Neil popped out in the emails this morning. The biggest start to a quarter since 2009, so quite a significant move across the US indices. But yeah, this JOLTS number is interesting. Obviously, this is a lead up to the big one on Friday with the non-farm payrolls. Although at the moment the average hourly earnings, because it's an inflation metric, it's measuring kind of wage inflation, it's arguably slightly more important. But the JOLTS is a private version of the non-farm payroll figures, so it can give you a little tell on which direction that may go. So do keep an eye out for that at 3 o'clock. Expected at 11.07 million, which is off a little bit from the previous month. But with good news being bad news, any kind of big number on this might actually send stocks a little bit lower. I know there's some questions in the discussion group about that. So yeah, it's the good news, bad news train that we are very, very much on at the moment. Much simpler, if that's not clear, to trade the currency, of course. If you do get stronger jobs, then that's likely to, first of all, be in normal market conditions when you're not looking at good news, bad news, creates more GDP, makes for a stronger economy, and is good for the currency. And now we're in the regime where we're in the inflation cycle. If the job data is stronger, then that's going to increase the aggregate wage inflation, and hence interest rates are more likely to be increased as a result. And that's why we see the currencies strengthening even in this environment. So if you're not sure about the good news, bad news on the indices, perhaps looking at the currency might make a little bit more sense. And on the flip side of that, gold is something that I mentioned earlier. Had a really nice up day on gold yesterday. And again, if we scroll back, the data arguably on gold was more effective on gold than it was on the S&Ps. We popped from 1668, and within 20 minutes we were up $20 pretty much on gold. A lovely little pop which kind of continued, and we're now kind of trading a good $50 higher than where we were, just shy of that. from $40 higher currently from yesterday's ISM data. So if you are looking for something with a little bit more juice, then perhaps trading gold inversely to the dollar is the way to have a look at it. Let's have a look at the open as we get there. A little pop on the S&Ps to start. Even this is in spite of the yields creeping higher, but we just kind of moved towards the value highs on Wall Street. We have seen a shift in the value area as well on the Dow, so that'll be interesting if the bottom can act as a bit of a magnet if it does start to pull lower. But yeah, don't kind of get clouded by the technicals at the moment. We are at the start of the month. We are in very much a bull trend this last 24 hours or so. So I wouldn't be trying to jump in the gun too early on trades as we approach it today. Just to kind of flip back onto these fundamentals, I know yesterday we had back to where we were on the Dow after having touched that liquidity area. This is always a really nice tool to use, the Fed rate monitor tool. It kind of gives you a view on what the probability is of a rate, what the probabilities are for the various rate hikes based on the Fed funds futures. And currently there's a view that we are going to get another 75 basis point hike at 64.2% chance. So yeah, 2/3 of a chance, you would say, of that, and only 1/3 of an opportunity of getting that mere 50 basis point hike from the Fed when they meet in early November. This is always a good one to look at after data if you're never sure about how that's going to impact what the Fed would do. The Fed funds futures will imply it in this data. So yeah, this central bank Fed rate monitor tool on investing.com is a really good free tool to base that upon. So back to the markets. Yeah, we've kind of pushed back off that level. Yields are still nudging a little bit higher. It's looking moving pretty quickly, I would say, really the last 20 minutes or so. But stocks haven't given up just yet. Yeah, it'll be interesting to see the dynamic on this today, whether the inflows that we're currently getting are going to be strong enough to move things forward regardless of yield. We shall see. But yeah, seeing these the 10-year yields as also just, or the 10-year note has just dropped to a new low, so the yields have probably just tagged a new high. And yeah, this is kind of what we're seeing across on the 2-year as well. 2-year obviously is a little bit more sensitive to short-term interest rate decisions by the Fed, but this is a good place to look on the 2-year if you're wondering what the Fed are most likely to do next. But yeah, the Dow has kind of bounced from that point of control. We're very much in that range for now. Often we've seen a bit more volatility than this on the open, but yeah, here we go. We're starting to get a little bit more of a push just now. Up, how far are we on the open? Up a nice 50-60 tick so far. Decent start on the Dow, S&P 500, 10 ticks there, just getting towards highs of the pre-market. But we do have this value area high to take out. But given that we had seen a little bit of a nudge in yields, I see some sort of a break on this. But perhaps the flows into the market that we had yesterday are going to continue throughout the day today. Yeah, with less than 30 minutes through to this JOLTS data, I'm very much going to be keeping my powder dry. I've just had the decision to make whether I'm going to trade the S&P 500 again as I did yesterday, or if I'm going to maybe have a look at the gold market, because that was something that was moving very, very, very quickly, as these markets are already seeming to do. So yeah, let me leave it with you. We'll be back in the morning with Neil at, well, we're on the 6:55 Zooms. Markets are obviously moving pretty quickly from 7 o'clock these days. That's 7 o'clock seems to be the new 8 o'clock. So we'll be with you live at 7, again at 8 now, and yeah, with you again for the US Open as we go through. But yeah, thank you for joining us as ever. If you haven't already, subscribe, please click the link. Haven't seen any questions, so I'll leave you guys to it. Good luck trading this afternoon. Eyes on the JOLTS. Cheers.